Guys, I hope you're all good. This is your boy Alfred Long speaking, Blue City Forex. It's been so long, guys, since I've posted a video on YouTube, but now I'm back, so let's not waste time. Let's just get down to it. I'm not gonna be explaining a lot of things, so in this video I'll be doing some smart money concept trading. Okay, so first of all, guys, I would like to demonstrate you some basics of Forex. As you all know that Forex is gonna be like moving to the downside or to the upside, and on a downtrend, whenever the market will be breaking some previous lows, it's gonna be called to be the break of structure. Same applies to the uptrend. Okay, and at each time the market breaks the structure, we are expecting the market to be going down, and that's how we know that the market is continuing to the downside or to the upside. So whenever the market is gonna be changing the direction, how do we know that the market will change the direction to the upside? Since it was selling, the market has to break a previous high that was forming on the previous bearish movement. So this movement is gonna be called to be a change of character or a change of direction. Okay, so since the market was moving to the downside and now we have a change of character, the market is moving to the upside. Those are the basics for the smart money concept. Now that I've given you the basics, guys, don't confuse these things. Let's jump into the chart. Okay, so we have a low, we have a high, we have a low, we have a high, we have a low, we have a high, and we have a low that did not break the previous low, so the market went to the upside to change the direction. So let's quickly look at this example right here, guys. We have a break of structure and we have another break of structure. So at each time the market breaks the structure, we are expecting the market to be going down. Break of structure, we are expecting the market to be going down up until the market change its direction. How do you know that the market is going to change the direction? The market has to form a change of character, and I've already explained what's a change of character, so I'm not going to explain it more. This is a change of direction or a market structure shift. Okay, so after we see or we spot that we are having our change of character, we are going to look for these two things. Number one, we are going to look for a fair value gap. Some other terms I won't explain what they mean, guys. I mean, like, you have to go out there on Google and try to find out what's a fair value gap. Number two, we are going to trade our famous order block. So this is a famous term when it comes to smart money concept. Okay, and when you spot your order block, you are going to highlight your order block. The order block is going to be the last selling candlestick just before the market created our change of character. Okay, you are going to drag it to the far right, and you are going to highlight or to just highlight where the market tapped into the order block. You are not just going to start trading and all those things. We are going to look for the candlestick that's going to be trading above the order block, because that's going to be your confirmation. So you can enter anywhere here, however I prefer to enter where there is a confirmation. So this is where then you need to understand the stop loss part. You are going to mark the lowest low or the previous low, and then at the previous low you are going to add 1 pip or 10 points. Okay, so when you add 10 points into your thing, your stop loss is going to be, we have our 7 pip stop loss. Can you imagine, guys? That's like 7 pip stop loss. And when it comes to take profit, we are going to be trading 1:2. That's the risk reward ratio. That's the risk reward ratio that you should keep in your mind, and also highlight your highest prices. But you are not going to trade based on their highest prices. We are going to trade based on 1:2 risk reward ratio. So you can see that 1:2 gets to hit the take profit. So guys, this is how I trade, this is how I do it. I keep it simple, and this is M5. You can do it in 15 minutes, you can do it in 13, 1 hour. However, I prefer to scalp, guys. So let's move to the next part so you can understand on what I did. Okay, guys, so this is the last part of my video, and I want it to teach you not to be greedy, to stick on 1:2 risk reward ratio. Okay, so first of all, I'll be marking my possible TP1, TP2 and TP3 areas, and these TPs, I'm not just setting them, I'm setting them based on liquidity grab purposes. Okay, so we have our TP2 there, and we have our last TP TP3, which is up here. And if you can like check on the market or the movement of the market or the behavior, the market did reach our TP1. Let me highlight it here. It did reach our TP1, it reached our TP2. However, it did not get to TP3. It turned in the middle between TP2 and TP3. But as the market was expected to go and grab the liquidity, as most forex traders teach you out there, you're gonna end up losing a lot of money just because of you want to reach TP3. So it's better if you keep it as 1:2 risk reward ratio. As time goes by, this 1:2 is gonna build up into bigger profits. So here I just want to list the steps that you need to start trading smart money concept, okay, or any other strategy. Number one, we are going to analyze the market. Analyzing the market is showing us your break of structure, your change of character, and your order blocks and all those things. Number two, you are going to plan your trades. So by planning your trades, it's like you planning where to enter, where to set your stop loss, and where to set your take profit. You understand? So it's simple. I've already explained that. Number three, it is where then you are going to trade what you plan. And if things don't go as you have planned, which means you are not going to trade, you're going to wait for the next opportunity. So I'm going to highlight the fourth one. The fourth one, it is the most important priority in trading. Set your stop loss, 10 pips, 7 pips, 15 pips, but don't go over 15 pips. That's a lesson. Okay, so guys, the last step is that you are going to set your take profit as to like 1:2 risk reward ratio. End of the story. So guys, this is the end of my video. This is where I come to an end. I hope you will enjoy my video and you will learn a lot of things. Okay, so if you want more of my content, guys, just keep on liking and subscribing. I'll keep on dropping more.